In the last video, we learned about what are different kinds of exchange, what is Nifty, what is large cap, what is mid cap, what is small cap. So we got a basic idea about what stock market is and how it works. So today we will learn what to do inside a stock broker. Stock broker means a company which acts as a mediator between us and the exchange stock market to do the trading. Okay, so there are different brokers, Upstocks, Kite by Zerodha, 5 Paisa, Grow, Angel One, Olymp Trade. So these are some examples of stock brokers which acts as a mediator and a broker between us and the exchange to do the trading. So there are two different kinds of thing we can do in stock market: trading and investing. Investing is the largely done thing which happens in a longer time frame. Investing is a thing which we can do for our future in a time frame for more than 3 years or 5 years. Trading is a thing which you do within a day. Trading is a thing, it's also called intraday trading. By that means you will buy a stock, sell the same stock within the day itself. That's called intraday trading. People also do swing trading, which is a thing where people hold a stock for more than 2 or 3 days. That's called as swing trading. So we all know that what happens in a market, either be in stock market, either be in a vegetable market, whatever kind of market around the world, we only do one basic principle, which is buy at low price, sell at high price, by which we get profit. That's the exact same thing which happens in stock market. We'll buy at a low price when the price is low, we'll sell it when the price is high, and the amount which happens in between is the profit for us for one stock. So people will buy 10 stocks, 50 stocks, 100 stocks, depending on the amount of money they have in their hand. So the profit of one stock will be multiplied with the amount of stocks that you are buying. That's called quantity of a stock. Okay, so we understood about investing, trading. When we use a broker to buy or sell equity inside a broker terminal, there's a thing they take from us, it's called brokerage, and it's the amount of charges they take from us for using their terminal. It's a broad thing, and I'll get to that point in future videos because we have to understand it really well in order to get actual profits from the trading or investing. Let me take an example to understand how to identify a good stock. I'll take 2 examples to make you clear about the ideas. One will be a good performing stock, another will be a bad performing stock, to identify the difference, to get to know how to choose a stock. So we are opening the website called Screener. There are 2 websites, Screener and Ticker Tape. Those are majorly used by investors who are deeply analyzing a stock. So I have opened Screener. I have taken an example company. It's not a stock recommendation, but it's an example company called NTPC. It's called National Thermal Power Corporation. This NTPC, it has a market valuation of 3,51,000 crores. So it's a large cap company, as I have told you in the last video. This company is performing really well in the last 1 year, and during the election time there was a huge dip. The price fell really well, and a lot of people bought at that price range. It has a really good price growth. That's a good sign, which means the investors are happy from the returns getting from the NTPC. So when checking the fundamentals of this particular company, we have to see the quarterly results. Quarterly results are a thing which a company produces every 3 months in order to give information to the shareholders about how the company performed in the last 3 months. That's called quarterly results. So there will be 4 results in 1 year. So the quarterly results of NTPC is really good. They are performing really well because the numbers are increasing every quarter. And when we see the yearly results, same, the number is also increasing year by year. It is also a good sign for the company because which means that the company is growing and the company is making actual profits from the thing. And we have seen the chart, which means the company is also growing. We did the basic fundamental analysis of the profit growth. Another thing which we have to check is promoter holding. Promoter holding means what percentage of actual company and actual shares are being holded by the original owner of the company. That's called promoter holding. The promoter holding is around 51%, which is a healthy sign. If the promoter holding is above 40-45%, it's a healthy sign for a company because the owner itself is actually holding that much percentage of company that's promoter holding. Okay, it's 51% over here, so that's good. So we did a basic analysis of this company. It has a chance to grow in the next upcoming 2, 3, 4 years. It's only an example just to make you understand the basics. That was a analysis of a good company, and you have to understand bad company meaning I am not a person to say if the company is good or bad, but in an investor perspective, that's what I am saying. The POV of people might change with the stocks or shares they are holding and their investing style. Don't mind my perspective while saying a company is bad, because I am only looking into the fundamentals. That doesn't mean the company is bad. The company might perform good in future. I'm taking an example of Adani Wilmar Limited. It's having a market cap of 43,000 crores, which is a large cap company. This company, when looking at the graphs of it, it is highly volatile. Volatile means the swing, the up down thing is it's too much. It's highly volatile in that sense, which means the price could go up any moment, it could come down any moment. That's not good in an investor perspective, because it's highly volatile. You don't know if the money will go down, and if the money you are invested in will go down, or if it will go up. We don't know that. And while looking at the net profit of the company, it is profitable in some quarters, it's not profitable in some quarters, but that's a normal thing for a company, because some quarters the company might not be able to perform well. But while looking at the annual growth of the company is making a negative growth, making less and less amounts in the year by year following in future. So it's not a great sign for a good company in that perspective. And the company have also given minus 40% in the last 3 years. The promoter holding is the same, because it's 87%, because majority of the company is held by the owner itself. So that's a good sign. But in other perspective, if you ask me to invest, I don't know. So that was an example. Identify different criteria in choosing a company. By doing this thing in multiple companies, you'll get a clear clarity on which companies to invest, and different things to understand about a company. It's a long process. You have to learn a lot about things to invest, and you have to learn a lot about different criteria in order to invest in a company, because it's your hard-earned money. So that was the basic analysis. And so we today learned about different brokers, what are different things that happening inside a broker, what's the use of a broker, then how to analyze the most fundamental things in a company. So I hope this video was informative for you. I'll come in next video with more informative things to get into stock market for absolute beginners. So thank you so much. See you next one. Bye.